juicy tax return. So I took a class at the CPA Society, and it was on financial aid for college, the best kept secret in America. And that was in 2002. And from that day, I said, wow, people don't know about how this works. And so now I specialize in helping families figure out how much they can afford, what colleges are within their affordability level, and how to get more money from colleges. And so I want to hopefully share a lot of that with you. This is a beautiful college. It's Colgate up in upper state New York. And I don't think it looks like that right now because it's in the snow belt. And so somebody's actually shoveling snow there. And the good news for a student, they don't have to shovel it. Someone else shovels it for you.
Peggy, it's not showing up.
Oh, okay. And okay, share. Okay.
I mean, Paula,
Paula, I know, I was going to hit you in the head.
Sorry.
Can you see it now or not?
Yeah, we've got it, Paula. Thank you.
It says goals for today. Okay. And I'll just show you Colgate. That's Colgate. Okay. All right. We're going to understand how, with the forms, what you have to fill out, because you can't just say to a college, I want money, and they say how much. No, you got to fill out forms to prove that, you know, you have a certain amount of money to pay for college with. And there's two forms. Most parents don't realize there's a second form, the FAFSA and the CSS profile form. FAFSA, all colleges use it, and profile form, only the colleges maybe 70 grand and above need that form. We'll talk about how colleges give out money and how to, you know, there's 3,500 colleges in the United States. How do you narrow it down to the ones that you can afford and that your child wants to go to, and they have the majors or the career direction that they want? So that's, you know, nirvana when you have all of those together and you can pay for them. Now, I just wanted to give you an idea of what college costs. And I usually use University of Washington as the metrics that we compare it to, because it's your state school. Colleges are not going to get any lower than a state school, other than if you go to community college. But the non-flagship colleges in Washington, like Eastern, Central, Western, Evergreen, they're maybe in the $21,000 to $22,000 range. So they are a little less expensive. Northeastern's in Boston, $71,000. University of Denver is private. You can tell it's private when they get into the 70s. But Berkeley is an unusual one because as an out-of-state student, we're paying out-of-state rates. They don't give us any deals. They don't give us any merit awards. So it's 70. And then Chapman, so many kids from around here say, get me out of here, I'm going to California, because when they're filling out the financial aid, well, their applications and all of that, it's raining out, they just have had it, so they want to go to California. And so Chapman's very popular, but it's expensive. And then McAllister is in the Midwest, nice friendly city, and it's 75. A lot of political science majors come out of there, or even pre-med and things. So they give generous aid. And I put community college just so you have some comparison to it, because occasionally a parent lost their job, they're sick, you have to take care of a sibling or something like that. And community college with books and tuition and a little allowance for driving, $5,000. And you could still get aid from them, but also if you don't get any aid, then you can borrow $5,500. So the child can pay for all of community college and the parents can pay nothing for college. So, and they have a good transfer program from community college to University of Washington. And community college also, I think Bellevue College has 38 applied science degrees where you can get a 4-year degree at community. That's why it's called Bellevue College now, because they give 4-year degrees. So just want to give you an idea. Now, you want free money, and there's various types of money from a school. Schools can either give you need-based aid, which is based on the FAFSA and the profile forms, which looks at your tax returns, how much money you have in the bank, and what your child has in the bank. Because occasionally grandparents give money to the child and they have 50 grand in their account and the parents have no money. So I would say if that's the situation, call me and we'll discuss that to see how much of an impact it would have on, you know, any kind of other financial aid that you might get. And then if you make too much money and you don't qualify for need-based aid, and that for a high-end school like a Northeastern or so, it would be about $260,000. They can give you also merit awards based on your grades and, you know, whatever talent that you have. So merit doesn't matter how much you make, but need-based grants, you have to have need to get some money from them. Many colleges give both need-based and merit awards because their merit award might only be $5,000, but the child's need based on the formula might be they need another 30 or something to go to that school. So of course it all depends on the school. So you know, this is sad that I have to say this, but kids look at location, and that's why every kid I work with this year wants California. And I can't say that you're only there for 4 years. Are you gonna, if you got into Harvard, would you say no to Harvard because it's not California? You can put up with the snow in Boston to get into Harvard, and then you can go get your first job in California. So I wouldn't just say I have to go to school in California, because most of the schools there are state schools and they don't like to give us any money. And the size of colleges, whether you want one where the teacher knows your name, the professor, or a 1,400, you know, size lecture hall or something like that. So when you go to a college to visit it, which I assume most of you will be able to do because COVID should be under control, you know, take a few classes at that school to see whether you like their learning style, and then the major and the final list. But there is something big missing. And since we're in the paying for college, the missing item is what can we afford? And some parents say to me, well, it depends on where he gets in. They'll pay for Stanford, but they won't pay for Northeastern or something like that. But I think you should have some kind of idea what your limit is after financial aid of what the cost would be. I'm finding most parents say between 40 and 45 or 30 and 45, you know, it depends on what your family's income is. Then if we can figure out what we can afford, then we can look into what colleges are in that range, and then you can go down deeper and do they have the major and all of that. So it's a multiple step process, and I don't want you to just tell your child to go find the colleges you want out of the big fist book or something, because it really won't tell you how much those colleges are going to cost. So there's better ways to look at it. So that's the revised order of how you should be looking for college. And I don't want to forget about the forms because they're a major portion of getting aid. And just like the child, if they don't apply to the school, they're not getting in. And if they get in and you didn't fill out the financial aid forms, then you're getting no money from them. And I don't think anybody wants to pay list price when you don't have to. So there's two forms, the FAFSA and the CSS profile. They both come out for the first edition on October 1. And I don't want you to fill it out on October 1 because it's a government website and it could crash on you. So fill it out by Halloween or something like that. They're not going to run out of money if you fill it out by Halloween. So, you know, everybody says, oh, you got to fill it out first because the money goes away. That's not true. You don't want to file it in February or March. Like, it's not like the last person gets the best money, you know, but if you fill it out before Thanksgiving, you're doing great. Now, what's the main reason why you're filling out the FAFSA? The FAFSA is really just a giant computer. You can't write any words into it. So they take your income, your assets, your child's income and assets, and it calculates a figure that they think you can afford for college. So in this example, and it determines your expected family contribution, what they think you can afford. This case, it's 38, where the parents make 150 as your adjusted gross income, 80,000 in assessable assets, not including retirement, and 4 people in the family. So 79 minus the 38 is 40, and Chapman will make an aid award based on that $40,000. So they'll try to give you a loan, a work-study job, a grant, and maybe a merit award, but they try to fill as close as they can to the 40. So I'll talk in more detail about the FAFSA and profile and how they're different. All colleges use the FAFSA form, and in general, all public colleges across the nation use the FAFSA form. But the profile uses it too because it gives away government money first. So if you're very low income and you're going to Chapman, it would give you a Pell Grant from the federal government, also student loans, and then they would look at their own endowment funds to fill the rest of your award. So now FAFSA has a great advantage right now. If you're divorced, they only look at one parent. Currently, excuse me, it's the custodial parent. In the next 3 years, it's going to be the parent that doesn't matter where the child lives, it's the parent that gives more financial support to the child. So think about that moving forward. And FAFSA doesn't look at the equity in your home, which could be a big asset because around here, the prices of houses are doubling. And, you know, if you've lived in it for 15 years, it's definitely has doubled. And though the profile form generally looks at home equity as an asset. So if you have 500,000 of equity in your home, they want you to borrow against it for college. Various colleges do not use home equity that still use the profile form, and that list is on my website because I ended up calling about 150 or 100 colleges to see how they use equity. The Harvards, the MITs, the Princeton, University of Chicago don't use it, but a Lewis and Clark uses it, Pomona, Claremont McKenna. So this is an important thing because it more or less adds another couple of $100,000 to your asset base, which could knock you out of aid. And if you're divorced, they have a custodial profile and a non-custodial profile. So it is a big issue, this profile form. People grouse about the FAFSA, it's so hard. Well, it takes me about 10 minutes. It's not that hard. And then those new changes in a couple of years is only going to be, I think, 38 questions down from 120. So it will get simpler, but the CSS profile is about 18 pages. So if you're going to start doing it on a weekend, it's kind of like your taxes. Start Saturday morning, don't start on Sunday night to get it done. And in October, November, and even up to now, I've been reviewing profiles and FAFSAs every day. And in general, I never find anyone that has done it correctly. And some of them are devastating errors that they made, which could cause them to get no aid, which means the child can't afford to go to that school. So be aware, there's help out there to help you review it. And myself and also Peg Keogh, who is a speaker tonight, also reviews FAFSAs and profiles. So another thing I want you to figure out your own expected family contribution, what the system thinks you can afford for 1 year for college. And of course, what they think is not what you think. So on College Board, there's an EFC calculator, but you could just Google EFC calculator on the web from just the major, input field there, and you'll get the one from College Board. It's only about 8 or 10 questions. It's pretty accurate. So at least you'll know. And if it's over 80 grand, that means they think you can pay more than $80,000 a year for your one child for 1 year. That's not a good number because that means that you don't qualify for need-based aid. But if you don't qualify for need-based aid, the other option is to look for schools that can give merit awards. And sometimes the merit award is $25,000, $30,000. So don't look down at that. Or lower cost schools, because if you went to Western, it's only 22. You don't really care if you get merit or need-based aid because that's actually a very low cost school. So you need to know this. This is like your blood pressure number for school. So how do they use this? This is the output from that net price calculator on College Board's website. So there's two sections. One is the FM method, which is the FAFSA method. So it's a federal calculation. So on $150,000 of income, they think the student can afford the family can afford $38,000 for college a year. Institutional is that CSS profile formula. And so it's a little less because that formula is a little bit more generous, but by default, they want the child to save $2,000 from the summer before they go to college from a job. And so that the child has some kind of skin in the game to go to school. But still, it's at the bottom line is less a better formula than the federal method. So currently, what is your EFC? This is just a a chart that gives you ballpark numbers. So if the family's making 50 because somebody lost a job, or you're just a low income family, they think you can afford $4,000 for school a year. If you're making 100, it's 20. 150, it's 38. 200, it's 55. But if you happen to have two in college, sometimes somebody has a junior and a senior, so eventually they'll be in college 1 year apart. They currently divide your FAFSA number in half, so they think, oh, each kid only uses 2,000, 10,000, 27, and that's great. So there's a multiple discount with 2 in college or 3 in college or so. We had 6 kids in our family, and I'm sure we had multiples in college all the time, and I wouldn't be here if we didn't have that, because we needed a lot of aid. So in the 2023 to 24, they're doing a major revamp of the FAFSA form, and they're getting rid of that multiple of 2 in college. So if you have 2 in college, it still will be 4,000 each kid, 55 each kid. That is abusive. So I signed a petition to get rid of this, or to have Congress look at it again. Congress, everyone's rich there, so they don't care about FAFSA. So I don't think they realize the impact of this, but we're still looking into it, and it won't start for 2 more years. So we have time to argue with the government on making this change. So there's another way to, other than to look at your net price calculator, EFC, expected family contribution. I mean, so there's 2 ways of trying to figure out how much they think you can afford. So one is the EFC, and then the other is net price calculator. I'm hoping most of you parents have heard of it. It's on every college's website. The colleges and the Department of Ed, they force the colleges to put on a calculator that mimics how that school gives out aid. And they call it net price calculator. They're supposed to always call it that. It's a standard term. But if you can't find it on a website, just Google it in one of their search fields on that college, like Northeastern, and there's a search field, say net price calculator, and it will ask you a lot of financial questions. And the last screen gives you a possible financial aid award. And so I'm going to run through some of these just so that you see how this thing works. So Middlebury is a high-end private college, it's $80,000, I think, and they hide it on a menu. It's on the bottom part, so you're not going to just fall into it. So for that school, I would put it, in the search field if you need to look at it, because $80,000 is a lot of money. I don't think many parents that are listening tonight with a happy face will write a check for $80,000 a year. So I looked at 4 colleges, because these are popular ones that kids want to go to. And I didn't use any state colleges, because if you make more than about 80 grand, you're not getting any money from the state, unfortunately. So your list price. So Berkeley, this one I'm just looking at in-state, just because some parents say, well, we'll move to California so that we get in-state tuition. It's still 40 grand to go to Berkeley, any of the UCs. Their tuition's high, their room and board's high, so it's 40. And if you're making 150, you wouldn't even receive any aid, because your EFC is about 38. So they're only going to give you a loan, a $3,500 loan and a $2,000 loan at 2.75. So Berkeley is usually not a good option unless money doesn't matter to you. McAllister, it's in St. Paul. A lot of kids go there for political science or pre-med or so. It's highly academic. So cost of attendance, $75. And again, I'm using this $150,000 income. Look at the grant you might get, $36,800. That's a lot of free money, plus the loans. So watering down the 75 to out of pocket is 32. These loans are in the student's name, and it's another way of building up their credit rating, and also having them put some skin in the game, because you're still putting in $32,888 for 4 years. So that's, but if you're only paying $32 for a $75,000 school, consider yourself lucky. University of Denver, again, it's 71. It's like price fixing. Tuition's $53, whereas tuition at University of Washington is about $12,000, $11,500, something like that. See, Denver can give you a merit award. So if you're super wealthy and you don't have need-based aid, you can still get $21,000 from the school, because it has nothing to do with your money. Plus, this student at 150, they're allocating $5,600 in a need-based grant plus the loans, so 71 turns into 39. So that possibly could be on your keep list, depending on what you think your maximum amount that you can pay for college is. Most parents say between 25 and 45 or something like that. Some parents say 5,000, and then later on, after I show them the cost and their EFC, they'll say, okay, maybe 20,000, and they have some grandparent in the background that will help them out. Not everyone has a great grandparent in the background. So Northeastern 71, again, price fixing. And they might give you a $35,600 grant. That's grant means need-based, and in general, they're lowering the amount of merit awards that they give at Northeastern because so many kids want to go there because it's in Boston and it's away from you, the parent. My child said, I want to get away from as far away from you as I can, so he started ordering posters from Perth, Australia, because it's the world's round and that's halfway around the world. And if you keep going, you can start coming back. So I said, you're not going to Perth. So out of pocket here, 30 after the 71. That's not bad. It's more than a 50% discount. So when I work with a family, because I go through all of this with them, and even if they're rich, I come up with schools that are within their affordability level because not all parents qualify for need-based aid. So here, when I divide them all, Berkeley for in-state, 35. And if it was out of state, it would be 70. That's their list price. 32. Denver, 39, and 40 for Northeastern. And mostly I meet with the parents, but they can take my worksheet, usually there's 10 schools across, and review it with their student because it's it's objective. The kids can look at the bottom line saying, wow, this is expensive. Because what if all these schools are like 38, 35, whatever, and some schools are like 80? And the parent says, I'm not paying 80, but they want to go to NYU. NYU gives out lousy aid. So it might be 80 for NYU and then look at, 40. So that's another 40 grand just to go to NYU. So I try to get the kids to be a little bit more financial savvy. That it's not that the parents don't love them, it's just that the parents can't afford it. They don't want to go bankrupt and they have maybe 2 kids to deal with. So, a lot of kids want to go to an Ivy League college and they think, oh, all my friends are going to Middlebury or Northeastern or all these fancy schools. Well, I hate to tell you, at the end of the day, they end up at the University of Washington because the parents say no way. And it's not like every kid goes to these schools. So these are really where they go. Public schools in the US, 77% go to public schools. 20% go to the smaller private schools like Seattle U, University of Puget Sound, St. Mary's of California. And then the top highly selective schools is only 3%, and that includes the Ivies and then Claremont McKenna, Pomona, that kind of stuff. So I hope your child doesn't feel left out because they're not going to these expensive schools, because it's really, most kids go to public. And then CEOs of major corporations go to Nebraska, Wisconsin, Utah, Iowa State, so again, they're not going to the Ivy League colleges. Ivy League college kids end up going to Congress. And I don't know if, looking at the current state of affairs, I don't know if you want to be in Congress. Anyway, we shouldn't get political. How do you get money? So where do they come from? As we saw in those net price calculators, much of the money comes from the colleges themselves, 98%. So if you need merit awards, look at colleges that can give merit. And I think on my website under handouts for financial aid talks, it will have some merit award, colleges that give merit awards. And it also has a copy of the slides for today, as well as how colleges use home equity in the formulas, about 10 different handouts that you could look at. You would know if you're being recruited athletically, so I won't even talk about that. Private scholarships, everyone talks about how there's so many scholarships out there that don't, get found. What if they're $500 a piece? I'd rather get 40 grand from a college than 500 from a private scholarship. So I would look more at, spend my time finding the right college and also doing a good job, that maybe you get more of them in being a good student, so you get more merit awards from the colleges. And as a last resort, I'd look for them, because there's so many, it starts looking like spam when you start looking for outside scholarships. And really, your GPA SATs can never be too high. And, you know, if you stand out with some kind of activity, that is very helpful as well. And I know we can't take SATs right now, but by the time some of the students that are listening today, I'm sure they will come back. They're not going to, College Board has too much money in the SATs. They're not going to give them up. So we also have what they call Western Undergraduate Exchange. Our state, Washington, has lots of states that are near here, and we can go to some of their public colleges for 1.5 times the in-state rate. So if University Montana State is $8,000 for their in-state, we pay, say, $12,500 for their WUI rate, Western Undergraduate Exchange it's called, rather than say $28,000 as a true out-of-state tuition rate. So it allows you to put more colleges on your list, so give you some volume that are in the affordability range or the lower cost. They're not in the $80,000 range at all. And of course, Berkeley is not one of them. It's all the smaller Cal states. So these are the most popular ones. And I said, look at the honors colleges, so that you're, you know, if you're a great student from Newport or wherever, you know, all honors colleges, they challenge you. I can't say that they don't. And a popular one is Boise State. I think you can go there for about $28,000 being a WUI resident, not too far away. Airfares are like $100 each way. Colorado State is one of them. Montana State, you can get right into their engineering program. Hawaii, of course. You know, there's quite a few. There's 6 pages worth. So these are only the top ones that I see quite frequently. And saving. If you have any, you know, if your kids are in high school, I hope you have a major part saved, because if you have 529s and they're only $12,000, that means you only have $3,000 a year for college, when the college you need 40 grand a year or so. So look at what you've saved. Look at what your budget on how much you can pull out from your earnings, because the colleges know that the responsibility is on the parents. And you should have saved some all along, some, which is these items, some from current earnings and some from borrowing. And if your grandparents say they have money, ask them how much, because they sometimes do not want to tell you, but you want to know if it's 5,000 or 50,000. These are common merit awards for good students in the 3.5 and above range. Seattle U, 10 to 30 grand, Gonzaga, 12 to 25. So good merit awards. I see them quite often. And remember, Berkeley, UCLA, you know, UC San Diego, no money from them. Okay, don't forget. So I can't say when you go home tonight, because you're already home, but these are 2 things you need to do. Calculate your expected family contribution, just to see if it's over 80, which means you don't qualify for 80. It'd be nice if it was in the 30 range. You won't get money from the state school, but at the private schools, you most likely will get some pretty good money. And then try a few of these net price calculators. Remember, garbage in, garbage out. And one thing people forget to do is on your W-2, when you put 30, you know, say 15,000 into your 401k, the formula adds that back in. So I don't want you to underestimate your income by 15,000 by not putting in your 401k. That's called untaxed income. And so that's the end of the show. How much can we afford? And if you've done this, you have happy students and a happy graduation party at the end. And please, if you have questions, either put them in the chat line, because I will get a copy of that, or also just email me. And my website is just, again, paulabishop.com. I got lucky that that was available, and it has some of the handouts that I mentioned on the seminar pages. So, okay. So we have 10 seconds probably, but I hope you learned something. Don't say, oh, woe is me, college costs too much, because there's ways of paying for it. And you don't have to go to the most expensive colleges. Okay, so now it's 7:50. There's 10 more minutes to the next session. Go ahead if Tanya can.
I don't know.
Okay. So